Pretty much a 15% total return for the first half, which obviously is better than most expectations. We've already surpassed most of the early year ahead targets by most of the strategists, and that usually, if the almanac matters, it leads to better gains in the second half 3/4 of the time. No guarantees, but obviously that's been the tendency. I think more recently we've just held the gains. The S&P 500 has been kind of pinned in place for a little while. It's slowed down. There has been a little bit of retracement, wear and tear below the surface, but not really to me about macro. It's not. It's definitely showing that we've gone away from the overheating, accelerating economy type theme, but it's not as if we're really rethinking the underpinnings of the earnings growth just yet as we get into July.
Leah, do you feel that markets are overheated a bit, or is the second half going to be as good as the first half?
Yeah, I actually still like equities quite a bit, and you're right. There's these really interesting violent rotations that you're seeing going on underneath. So you saw value outperform growth by the largest margin we've seen in history in January, and then you've seen growth outperform value significantly since mid-March. But I do think there's a couple big themes that are happening that are still underappreciated by investors. One being improving profit margins, because companies have really had to remake themselves during COVID. So I think there's lots of opportunities.
Josh, if you look at the year-to-date gains, for the S&P, 14.4% higher. For the NASDAQ, it's 12.5% higher. But as Leah just alluded to, that gap is closing. Growth has played a lot of catch-up. Is there more of that to do here entering the second half?
It's possible. I think one of the most encouraging parts of the first half is how much participation you had from sectors that it's really been a while since investors have even had to trouble themselves and learn the names in these stocks. Materials obviously comes to mind. The thing is, though, those are still very small. Even energy, it's doubled, but it's still down substantially from 2014, 2015, and it's still small. So my point is, if we're going to see a continuation of this rally in the second half, you really, I think, are still going to need some participation from the big guys on the NASDAQ, like the NVIDIAs and Apple and Amazon together are 12% of the S&P. So if you're going to see a continuation, it's not that participation isn't important. I think it's great, but you're really still going to need great results on the earnings front and on the sentiment front in the big stocks. I think you could get it. You may not get it to the same degree that you've had in the last 6 months, but I think it'll be essential.
Mike, how much are people going to be focused on the dollar, and is it reacting because of expectations of hawkish commentary from the Fed over the summer, and is that a problem if that materializes?
It's been reacting to that in a measured way, I would say. I mean, I think that's at least the direction of surprise was toward a little bit more of a hawkish interpretation. I still don't think we're necessarily saying it's out of the range it's been in yet. So it seems like it fits with this flattening of the Treasury yield curve, this idea like, okay, maybe we got a little bit ahead of ourselves in terms of just exactly how hot this thing was going to run for a while and how maybe inflation was going to be allowed to flare up. But I'm not sure. I think a lot of things are right in the middle right here.
Well, it's a global growth slowdown.
Yeah.
That is something
That's
that has
happening.
been starting to be priced in. We've seen it in Treasury yields, and the dollar seems to be reacting to that.
Right.
Because the U.S. is outgrowing a lot of countries, most countries right now. We're better on our vaccination rates, and that's one place.
Right, but
along with cyclical stocks.
Yes, but again, it's more just taking back a little bit of the overshoot on those fronts than it is, okay, game over, we're back to a 2% world, and we have to just go to the disinflationary type place. I don't think we're quite there. That's why it's an in-between moment. A lot of the people out there who were behind the value and cyclical trade are out defending it now and saying, look, this is an opportunity. You have transports down 9%, home builders down 8 or 9%. Maybe that's the time where it's a little bit of a moment of truth to say, is it a reversal or just a correction?
Shepard Smith here. Thanks for watching CNBC on YouTube.